Okay, I thought it would be a good idea to do a small follow-up and talk a bit about more general topics. I mean, at the end of the day, um, it should be clear now what's going on. Yes, I've delivered a lot of evidence. Yes, I've delivered live trade videos. For almost 2 years, I have posted a lot of screenshots. I've posted illustrations, I've made videos explaining the mechanics, I've written text explaining it. Okay, I recommend you to look at the educational videos explaining the different principles. And if that doesn't wake you up, then nothing will. Sorry. This is completely unique. You will not find anything remotely similar anywhere. Yeah, there's some guys, they explain, for example, stop hunting in general on naked charts. Yeah, that does exist. There are other guys who are aware of manipulation in general and who develop, for example, their own approach, price-based approaches. But you will not see anything like this here, where you can actually observe live in front of your eyes how the market structure, the relevant market structure actually looks like, how the smart money algos conduct the price manipulation, how they go far beyond just stop runs. Yes, I mean, apart from the fact that you need to distinguish between short-term, medium, long-term stops, as they all have their own dynamics, you need to be aware of the dumb money positions in the market, at which price levels they are located, in which direction. And that's still not enough. You also need to understand the different principles, such as the blocking principle, the plausibility principle, the no easy money principle, the anti-learning principle, the dumb money tolerance principle, etc. And this is the way to understand how the smart money algorithms operate. Okay, and once this is understood, you will realize that there are many situations which are very predictable. Now, let me emphasize once more, we will never be on the same level like the smart money. Yes, we will always be 1 or 2 steps behind. The smart money has a complete execution advantage. It has a speed advantage, it has a transaction cost advantage, it has an informational advantage, and it has price moving abilities. Okay, everybody on the buy side, whether it's speculators, whether it's corporates, whether it's funds, whether it's retail traders, whatever it is, everybody on the buy side is a price taker. Okay, so we cannot move the price, but the smart money can. And it's important to understand that this is a battle between two unequals. Now, obviously, once you understood what I showed, this will help you a lot. Yes. And I've said before, there will be 3 groups basically. One group of people who will be able to use that knowledge in order to at least avoid some of the smart money traps in their trading. Then people will adjust their approach or systems based on that market knowledge I have shown. And then also people who are actually able to develop a complete trading approach or system based on the knowledge I've shown. It's not easy, I'm not saying that, but I can tell you I already know a small number of people who was able to do that. Yes, who was doing a lot of research, people who did their homework, and people who found ways to trade that suits them and which takes advantage of some of these phenomena I've exposed. Now, obviously, there will be a very low number of people around the world who has developed something similar, yes, but they will not, show you that stuff. I'm one of the very, 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 very few people who also allows you to look into the engine of the market. And if you still don't get it, The markets are not driven by supply and demand. Don't ever use the terms bulls and bears, okay? Don't listen to those market analysts saying, oh, if 120 is broken, we buy it, the opposite we sell it, and so on. I've talked about this before. All these guys, the majority of people in the industry don't have a clue what's going on in the market. Even within investment banks, a lot of people don't have a clue what's going on, okay? Only in certain teams, people have an understanding how this manipulation is conducted and who does it. And I've said before, it's a cartel. Yes, they are smart money entities cooperating rather than working against each other. Remember the prisoner's dilemma. It's really like a poker game where they see your cards, they can decide the next card on the table. So what they do is they make sure that they pick a card that brings the maximum damage to the maximum number of people on the dumb money side. Yes, it's very unfair, it's very unethical. And they do it every day. Now, let me say once more. Unfortunately, this may even be necessary, okay? It's always easy to point the finger at guys and say, look, these guys, they make a fortune every day. Yeah, it's true. And they get fined every 5-6 years for that, in the size of billions. I've shown that as well. However, remember, the only way that the markets, the FX markets are so liquid, so deep, so cheap to trade, so available, is that somebody, has an advantage. Nobody will just take the other side from your choice of when you buy or sell, how much you want to buy or sell, what you want to buy or sell, etc. That's common sense. There are no perfect hedges neither. I've talked about this a lot, I think. And so let me elaborate just a bit on the perspective of the causality trader. So I call this market causality, because it's not random. There is actually, a stimulus and then a result from that stimulus. And what you should do as a causality trader is you should not just put in a lot of trades every day. No, you should trade when the market structure is clear to you. For example, like in this case, it was not a difficult trade. The market came up a lot in Kiwi dollar, and the dumb money kept on buying. So to place a short up here, back into the range against the dumb money buyers, back to the inner range stops, was really not difficult. And those are the situations you should basically look for. And also remember, what's really good is you can also see when a market is in a low bias state, yes, and then it's not clear what will happen next. There may be longies as well as shorties, and maybe stops on both sides. Well, if there's such a market, then stay away, just skip it. So the stronger the causality bias is, the stronger the dumb money bias is, the higher the smart money boldness, and therefore the higher likelihood that you will place a trade. And obviously the advanced trader will also determine his position sizing based on the causality bias. So if it's a strong bias, they will risk more. If it's a low bias, they will risk less. And as I've said before, there is basically one scenario, it doesn't happen very often, but it happens now and then, where you could be in a situation where you are in a high confidence trade and you need to switch. Namely, that's a dumb money switch scenario. Basically imagine you're short here and then suddenly there's a massive dumb money short accumulation. So the dumb money traders suddenly put in big short orders. So imagine you would see big red bars here and then consequently here. Then of course what will happen, the smart money will switch into the other direction. And it can be that you are in such a situation and you need to switch with them. That's pretty much the only situation, next to, for example, very strong news results and the need for the smart money algos to maintain some plausibility. And therefore they do, for example, an exaggerated fishing bar or something like this. These are situations where you can have done everything correctly and interpreted the dumb money bias correctly and placed the trade correctly, but still you can either end up in a losing trade or in a situation where you need to switch. This is the reason why the hit rate is not 100%. Okay, I think I have explained a lot here and shown a lot here. Stay safe, guys.